Hi, this is Gloria Heck with RE/MAX Direct, and today we're going to be looking at how inflation will impact the housing market. So hang on. Everywhere we turn, we hear about inflation and how inflation is going to cost us more money. But what you want to know is how will inflation impact your decision to purchase or keep your home? We've gathered some great info thanks to Keeping Current Matters. And here's what we found. Mortgage rates continue to move up, says 𝐬𝐭𝐡𝐞𝐫, who is the chief economist from Freddie Mac. Quote, mortgage rates moved up again as the 10-year U.S. Treasury yield rose and financial markets adjusted to the anticipated changes in monetary policy that will combat inflation. As a result of the higher mortgage rates, purchase demand has modestly waned in advance of the spring home buying season. However, supply remains near historic tight levels and home prices remain high, keeping the market competitive, end quote. Okay, so despite the winter season, when housing activity seems to be rather dormant, home buyers this year have remained in the market trying to take advantage of the current rates before they increase. Purchase applications rose last week as buyers rush to beat the quickly rising mortgage rates, says George Ratui, who is the manager of economic research for Realtor.com. Take a look at this graph that compares rates from 1970, when it was 8.86%, and the 1980s, when it was 12.70%. My mortgage rate in the 80s was 10%. Wow. As the decades passed, the interest rates began to decline. And the graph at the end, where you see 2010s, the interest rate was 4.09%. Currently, in 2022, the rate is still low at 3.56%. Now let's take a look at the 10-year Treasury yield that increased from December 21, when it was 1.43, to 1.87 at the end of January. Interestingly enough, for almost 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury rate. Take a look at the graph that shows the striking comparison. So now mortgage rates have hit their highest levels since March 2020, when they were so low. This has resulted in less people refinancing. But people, listen up. Homeownership is still a hedge against inflation. Housing is one of the most effective hedges against inflation. Investing is not just about building wealth, okay? Not just about building wealth. It's about not destroying wealth. Even a small return above the rate of inflation over the long term on a place you would like to live in anyways is a pretty sweet deal, says Ben Carlson with Ritholtz Wealth Management. But that's not all. Mark Cousin from Investopedia says real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. Check out this graph that compares home price appreciation versus consumer price increases over the decades. So as you can see from the graph, home ownership really is a hedge against inflation, especially in 2021, with 18% home price appreciation versus 6.8% for inflation. James Royal from Bankrate said it best. A fixed rate mortgage allows you to maintain the biggest portion of housing expenses at the same payment. Sure, property taxes will rise and other expenses will creep up, but your monthly housing payment remains the same. That's certainly not the case if you're renting. The cost of renting certainly is being impacted by inflation, as evidence from this graph that shows how rental prices are increasing even higher than inflation. Unfortunately, those of you who are renting see that you're paying more for rent. Natalie 𝐎𝐭𝐿 from Forbes reminded us homeowners are shielded from mounting rental prices because their cost is fixed, regardless of what's happening in the market. Tangible assets like real estate get more valuable over time, which makes buying a home a good way to spend your money during inflationary times. According to Ellie Wolf, chief economist for Zonda, if you have cash and are expecting inflation, you want to think through where you can put your money so it does not lose value. Housing is commonly looked at as a good inflation hedge, especially with interest rates so low. You saw the graph on how they were over the last couple of decades. Interest rates are still very low. So there you have it. Thanks for checking out this video. If you'd like to find out more about what's going on with South Florida real estate, or if you want to get some tips on buying or selling, check out some of my other videos. And don't forget to subscribe to my channel so you don't miss anything.